I am Janet Ruiz. I live in Northern California. I represent the Insurance Information Institute, which is a nonprofit trade association, and we are supported by the insurance industry. Our mission is to help people understand insurance, what it does and how it works. So let's go to the next slide. And as we're going to the next slide, I just want to let you know I also live in Northern California, and I'm a part of a fire safe council and live in a fire-wise community. So what do I do every year when I get my annual renewal notice? Stuff it in my file cabinet. No, that's the time to look at it, just 15 minutes, and you can find out how much you are insured for. And like Joel said, you should then look to, do those math calculations. Hey, $350 a square foot was the lowest price you could get in Santa Rosa after the Tubbs fire, and it went up from there. So look at your square footage, get your details right, and then look at the local construction cost. Check in with the Marin Builders Association and find out what the amount of average construction cost is in your area. It may be up to $400 or $500 a square foot. Look at the number of bedrooms and bathrooms, windows, doors, fireplaces. What type of roof and siding do you have? Joel talked about wood shake roofs. You definitely want to be getting a Class A fire resistant roof. And the types of finishes that you have in your house, if they're more expensive, less expensive. And then you don't add the cost of land into your coverage for your building and structures, which is your coverage A. So how do you prevent underinsurance? The demand surge, as we talked about, can increase the cost of materials and labors. And we certainly saw that in 2017 after the Tubbs fire in Santa Rosa, which is, probably the closest one we've had recently to Marin County. So when you're looking at your coverage A and thinking, my house is 3,000 square feet, it now is average $400 to $500 a square foot. That's kind of your basic calculation. But as Joel also mentioned, there are extra coverages on your policy, and these are very important, and they'll be listed on your renewal. So say your coverage A, I'm going to do easy math here, is $500,000. If you have an extended replacement cost coverage of 20%, then you're going to get another $100,000 if the demand surge has increased the cost of materials and labors. What about building code upgrade coverage? Well, the building codes now require sprinklers, they require solar panels, they require Class A roofs. In the house I live in, it was built in 1979. I would actually have to build it 6 feet up because of some flood concerns in my area. So I have 50% building code upgrade coverage on my house. There are automatic annual adjustments for inflation on your policy and built into it. So be sure to check these on your policy and add all that amount up and think, could I rebuild this house for this much money? And then maybe you need a small business or agricultural policy. My husband repairs and restores guitars, so we often have 5 or 6 of other people's guitars in our house. We have that small business coverage as well. Next slide, please. And will my policy replace all my belongings? Joel pointed that as well, that your contents are usually a percentage of coverage A. You can get 25, 50%, or 75% of your coverage A, that dwelling cost, on your contents. So, when I was at the height of buying, I might want a lot of coverage. When I downsize, when I'm going to travel more or retire, I may want less. So look at those carefully and get what you actually need. Update your policy after remodels and home improvements. Oh, I don't want to call my insurance agent. I don't want them to look at me. They're going to charge me more money. It's often not that much more money. But if you've added footage, changed the footprint of your house, you definitely want to be able to replace that in the case of a wildfire. So talk to your agent and your company. The more you talk to them ahead of time, if you have a loss in a wildfire, you're going to already have that communication going. So don't be afraid to talk to them. It's not going to put red flags on your policy. And then, as Joel said, keep receipts for major purchases in the cloud. It is much easier now. You can take pictures of things, you can store them in the cloud, even your receipts, and that makes it a lot easier when you have to replace things after a loss. Next slide, please. So what should I do if I get non-renewed by my insurance company? The first thing you should do is go back to your company and ask if there's something you can do to mitigate the risk and keep your policy. And then if there isn't, shop and compare. Like Joel said, folks that are local, brokers, agents, they're going to know what's really available in your area, which insurance companies are writing, and which ones might qualify you as an insured. Understand that there are options. He mentioned that we have admitted, which is your standard insurers, the surplus lines, maybe Lloyd's of London companies or others. They're all very good, and they all have good insurance to offer. So participate in your local mitigation efforts. You're already here with the Fire Safe Council, so you're doing that. Look into Fireways USA. I think Marin County has the most Fireways USA communities in the nation. So you're really doing good things that will keep insurance more affordable and more available in your area. Next slide, please. So here's some takeaways from me today. Insurance is a crucial financial safety net. So don't forget about insurance. Look at it early during your home buying process if you're buying a new home. Don't just take what the realtor says, hey, here's some insurance. Look around, find out what it's going to cost. Take an active role in assessing your coverage type and limits. And again, update your policy annually, and the easiest time to do that is when it comes in the mail. Make and update your home inventory. We talked about renter's insurance. And, if you have loved ones with paid off homes, make sure they maintain their coverage as well. You're in control. Make your insurance your partner before, critical, during, of course, and after a wildfire. But start talking to them now. Get to know who's in the office. It's much easier if you have a loss. Coverage amounts are up to you to decide because you live in the home and you know all the specific things that your home has that you want to replace.